Good evening, stocks to buy this week. Another live stream. I can't believe we're still doing this. Eventually, we're gonna have to bring some guests onto this because it's just me rambling every damn night. But there's always something worth rambling about. We're gonna take a look at kind of where the S&P sits as we finish up almost the half-year mark. What's been driving it this week? 3 months, 6 months. We'll take a look at my holdings, obviously within my portfolio, which, like you, I hope you're doing well because we all just be hitting all-time highs every freaking week. The S&P hitting new all-time highs like every single day. We're going to listen to Tom Lee. We're going to listen to Jim Cramer, all the clowns of the CNBC world to see what their thoughts are on stocks, the market as a whole. And then finally, if you did not watch the Boeing drama, I will present it to you here on a wonderful little platter to watch a CEO get absolutely eviscerated, ripped apart, thrown into the engine and blown right out the back because, whoo, man, I've never seen such an intense Congress or whatever the hell that hearing was about, but we'll get into that shortly. So firstly, let's just take a look at the heat map for this week because this was probably the first week that was not driven by NVIDIA's growth. I mean, I was shocked when I looked at this because it was vastly the other half of the S&P 500 that was driving a lot of the gains leading into the end of the close for most of the week. But obviously, the farther we zoom out, the more this story changes. Over the last month, it is mostly driven by big tech. You take it out to the last 3 months, again, most big tech becomes extremely dominant here. And then if you take it out for the last 6 months, as we kind of almost finish up this 6-month half mark, it's crazy to see NVIDIA's up 155%. Apple's barely holding on here. Microsoft giving 20%, Google up 30%, Meta up 41% here. And only one little company that I've been buying that has not been doing all that great, of course, is Tesla, which we'll talk a little bit about here as well. But if we take a look at the largest position in the portfolio before we do like a whole encapsulated, overview spreadsheet, it's crazy to me that the S&P is up 15% this year. I mean, you take a look at the 1 year here, and it has just been one hell of a terrible ride, man. I mean, just to be getting like these kind of gains at the index funds as of recently, like I said, it's been like, look at the 5 year. I mean, we're ripping up 84%, considering these last 5 years have been probably the most volatile markets any investor, especially newer investors, probably have experienced if you didn't live through 2008. And it has been a wild friggin' ride. I honestly don't think there's been a more wild time in the market outside of probably like this is so reminiscent of the dot-com bubble to like 2008. We just haven't had like a severe crash outside of the pandemic. But I mean, when you take a look at what happened, and this obviously we have to look at the S&P 500. This doesn't go back far enough for VOO. But yeah, it's just crazy to me how consistent the markets were from roughly 2009, 2010 after the severe crash because there just was no drama. I just don't remember there being as much drama as there is now. It was just such smooth sailing for most investors. We had the legalization of the MJ markets. There was quite a few catalysts, and it was just so consistent and steady. I mean, what's the biggest down period we had in VOL? Like a 10% correction, from 2015 into 2016. Like that was about as big as the blips were getting. Like you didn't see much more than a 10% dip, right? Like, I mean, what's this one here in 2019? Yeah, okay, 17%. Pretty spectacular until you hit the pandemic here, and VOO dipped whopping 32% and gave everyone a good shit scare. But yeah, I mean, look at the volatility. I mean, just from the pandemic onward, it's just been an utter shit show, hasn't it? It's been one hell of a ride, going to fall hard. Now that's debatable. We're going to talk about that because I think it really depends on who you're listening to. Because we're going to get some obviously more bullish opinions once we get into Tom Lee. But SCHD has obviously been not the best investment in comparable. We talked about dividend stocks. They shouldn't be like the end-all be-all solution to an early day investor's idea of retirement. But we're still getting decent returns here for a year. 1.86%. You get your 3%, 4% yield. It's not terrible. I still think most of these stocks are going to be more recovery play. That's why they haven't seen as much of a rise coming out of the pandemic. But again, that's so speculative in nature. I keep talking about like the interest rate plays, your telecoms and this and that, but the reality is that's speculative in and of itself, and it's something you got to be super patient for because that's what's playing into most of these dividend stocks. Still, VDY gave up all the gains that I had this year. It was up almost 5%, really crushing SCHD, but has given a lot of those gains back. And the only stock that I really want to keep buying here outside of VOO is primarily Tesla. I'm almost got my Tesla position filled out. I told you guys before August, before they start doing any major announcements, I really wanted to get about 100 shares back, and then we'll see where the stock goes. And I really wanted those 100 shares to be well below the $200 mark. Right now, my average cost, I think, is around $184, give or take. I have to double check and make sure that math's correct as of the most recent buys. We've got about 91 shares. So we're going to finish up probably this week. I might buy my last Tesla shares either this week or next week, and then just debate on where it goes from there. And I know it looks like a relatively large position in the portfolio, but you got to keep in mind, like, this is just my portfolio. This does not include like our real estate. This does not include my fiance's portfolio. Tesla realistically is like well below 5% of the entirety of our like combined assets. Like, even though it's 8.2% of my equity portfolio here, it's very minuscule still in the scope of things. So I have room to buy it. I don't feel like I'm getting over leveraged in the position, because there's obviously risk with all this, and we'll see how it pans out. That's still debatable in and of itself. But let's talk about the markets here. Let's get into the more controversial stocks. You know, Tesla's pretty controversial. Nvidia, I think, is still the defining factor to what the market's going to do. And this is the first kind of hiccup we had right after it hit all-time highs. I mean, it really hit the largest company on the the S&P 500. It surpassed Microsoft and Apple, and then kind of gave that up within the same day that it passed them. So it's going to be really neat to see how this pans out, considering Apple's starting to trade down pretty heavy. Bitcoin's trading down. We'll see if the markets can hold up here if we get a correctional period. But that's why I think it's funny to listen to good old Tom Lee. You know, at the end of the day, bears get sent to slaughter, and bulls always end up winning. So if you're long enough in the market, and we'll get an idea, because Tom Lee's probably the most bullish investor I've ever seen. So we'll just listen to a couple segments here.
In June for the right reasons, softer than expected inflation, and he is seeing more positive signs ahead, and he's sticking with the big names in AI. Tom Lee is here. He's Fundstrat Global Advisors co-founder, managing partner, and head of research, and he's a CNBC contributor. It's great to see you.
Yeah.
I want to start in a little bit different way than normal, because Doug just made a really interesting point about millennials and how they're so conservative in their positions, and whether you've experienced this.
I am so curious is that even a stat? One sec. Let me just Google that. When I heard that the first time, I was like, there's no way. How do you even find that data? How conservative are millennial investors? Like, can I even search that? Conservative are millennials investors. I where does that stat come from? Millennials are so conservative. Why? Blah, 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 blah. What do 90% now? I can't even, where the fuck does that stat come from? Whatever.
Phenomenon firsthand or not. What do you say to those who need to be coaxed into a market that is ever at record highs after a run in stocks like Nvidia, like we've rarely before seen? I mean, is the water still safe?
I know investors generally aren't comfortable buying things at a high, but if we're mid-cycle, which we probably are, then we're going to be making a lot of new highs over the next 5 years anyways. And I think there's a lot of statistical support showing buying at new highs actually has a better win ratio than attempting to buy at lows.
Well, it's also true that for all of our lifetimes, the stock market has generally gone up.
Buying here. I mean, I was ranting and raving to you guys and all the idiots out there that when Jeremy was getting all skittish, when the market just took a dip, and even me, Kevin's like, I'm going cash. And I told you guys, good time to go heavy. And I bought the dips in October. I go the most aggressive when the market dips, and it's panned out for the best return. So don't know what you guys are talking about buying all-time highs. You got to buy all-time highs some of the time.
So yes, there are pullbacks. Yes, there are corrections. Yes, there are financial crises. Yes, there are pandemics. But is there any reason to believe that the fundamental nature of the beast has changed for the worse? I mean, I read this research sometimes, yes. I'm sure you've seen it, that says, oh, we're going to have permanently lower stock returns now. 4% a year is the most you should expect, and things like that. We've pulled forward gains. I mean, do you believe there's credence in any of that?
I've heard that exact statement about the new era of low returns since 2008.
Right.
And stocks have compounded at pretty much the historical average since 2008. I think as long as there's skeptics out there, that means there's a lot of fuel for upside.
Mm-hmm. So is NVIDIA the thing that you look at and go, well, this could spoil the party, i.e. it becomes too much of a good thing. It really starts to lift into some kind of bubble, draws people into the market, really extends valuations, then we have to clean up the mess.
There's a lot of people trying to top tick NVIDIA, saying that they don't want to own it because it's expensive, but it's a 30 PE stock that sells something that no one else actually produces in the world.
The one thing it's not is expensive.
Yeah. So I'd say I'd feel very differently if we were discounting NVIDIA being larger than global GDP and at 100 PE, and everyone's saying there's no way it can be stopped. But because everyone wants to sell NVIDIA and try to call a top, I actually think there's still a lot of upside.
When I hear
Look, nobody knows the upside to NVIDIA. And the reason that people are calling it a bubble is because it's being lifted by major tech companies, that NVIDIA's entire stock valuation relies on the continuation of that in perpetuity for at least the next 2 or 3 years. that's the game you're playing with NVIDIA, right? It's not like end consumer driving that value. And the question is AI a bubble? Because in the scope of incredible lifting of valuation and incredible lifting of earnings and revenue, that has to be sustainable, and it's not. It never is. It's just a matter of, but that's NVIDIA. That has literally been NVIDIA's business forever. I mean, from the crypto boom, when that's all they pumped, that crashed, and now it's the AI pump, and eventually that'll crash, and then there'll be another pump. There'll always be another pump. It's just NVIDIA's business model, and it's kind of incredible that that's how they've gotten to where they've been.
Anecdotes, like I heard at a fundraising thing the other night about how all the local kids own NVIDIA. What should I think when I hear that kind of information?
Crypto all over again.
Well, it's makes sense. I mean, NVIDIA is the largest stock, so I mean, everyone should own it. It's almost like if someone said, I'm selling because everyone owns the S&P. I mean, everyone should own some S&P. It's really a bearish sign when someone says the S&P won't ever go down. And I only hear people saying the S&P's topping right now.
I do remember people saying stocks never go down a couple of years ago. Then we finally had a correction. I think we've had a couple maybe since then. What kind of paradigm are we in now? We hear people saying, like Mark Zandi did, well, the Fed needs to cut because otherwise the economy could take a turn for the worse. We know rates are probably higher than they need to be. Do you need to have a view on Fed rate cuts in order to support stocks continuing to move higher?
I mean, to an extent, I think that the big lesson for the last 2 years is the S&P has endured some pretty severe rate hikes. So we know companies are managing this cycle well. If the Fed turns neutral or dovish, that's even more positive for stocks. So I think that the environment for equities still is good because they survived a stress test. It's only bad if the Fed has to raise rate.
So I think, let me just make sure it doesn't replay, but I think when you come back to this chart here and you kind of zoom out on the, like that 1 year, I mean, we're only just starting to see some revitalization in the lower half of the market. Like tech has been what's lifted the entirety of the market. And I think if we go into an interest rate cut cycle, it doesn't matter if tech falters a bit, is a bit overvalued, or if NVIDIA starts to correct. I mean, we really need interest rate cuts because that's what's going to make Apple thrive. And that's what's going to get Tesla lifted. I mean, there's so many companies that I'm looking at that just, they're being so decelerated. I mean, Verizon, you name it. Half the dividend stocks that exist out there that are infrastructure or, just heavily in debt, real estate, for crying out loud. Like that'll be the real liftoff. And that's just not going to happen, at least for the next 6 to 12 months. It's going to be a slow grind into getting those first interest rate cuts. So, I mean, if NVIDIA can just keep up and the rest of the market and tech keeps posting the numbers they're posting, like the market should sustain so long as we don't get some crazy black swan event. But I don't know if it's that easy to be that bullish on the market. Like, it's just, I'm always on the fence, but I'm always glass half full, so I'll keep buying. But you can recognize that valuations here are expensive, man. I mean, look at the S&P 500 PE history here, and I get it. There's margin expansion. Companies have been laying people off. They've been doing what they can, but you can't argue that this volatility isn't continuing. Like we are just on an up and right trajectory for the S&P price to earnings multiple. I mean, I wish it was back down on the 20. I was fine paying a 20 times multiple, but when you get back into a 30, it's like for the S&P, really. Ooh, it's kind of hard to grasp when Apple and most of these big tech companies just aren't growing like they were. And you can't say NVIDIA is growing like a monster. It's just taking all the revenue from Apple, or not Apple, but Amazon, Meta, Tesla. All those companies are feeding it. So their earnings are feeding the growth of NVIDIA. So I feel like NVIDIA's growth is like falsehood toward like valuation because it's just being pulled forward from all these other tech companies that aren't posting the same growth numbers they once were. But then again, Microsoft has recovered quite a bit in earnings growth and all that. We'll see. I mean, it's still a perplexing time, right? So we'll see what happens. I think this video also is really interesting. Jim Cramer gave some good insight. Well, I don't know if it's good insight. It's usually his insight, but we'll take a listen.
And as usual, the biggest winner of them all was, you got it, come on, say it. It's NVIDIA, which has emerged as the king of both accelerated computing and generative AI. Out of nowhere, it's giving Apple and Microsoft a run for their money in terms of market capitalization. So much of this market depends on NVIDIA's chips. Sometimes you got to wonder if this one stock, Atlas-like, can support the entire movement. Now, I know one person who actually doesn't think it's possible, at least at this point. And that's the legendary Larry Williams, the dean of all market historians, who's nailed so many tops and bottoms in the show that we have to take his musings very seriously. So here's a chart. Now, don't get scared when you see this, because there's a lot of ways to look at it. Here's a chart that combines the current most dominant cycles in NVIDIA's share price. And to Williams, they paint a pretty clear picture of negativity. Now, remember, this meant that, okay? So you're looking forward here. He points out that cycles seldom paint a perfect picture. Yet he says they still capture an overall view of the landscape. And when it comes to NVIDIA, his cycle forecasts tend to be pretty accurate. If Larry's right, NVIDIA is putting in a top right here. Okay, that's why I'm presenting tonight, right now. Yeah, and the
Jim Cramer will look like a genius if this is right, pulling like this Williams cycle forecast. It almost reminds me of the fucking Bitcoin rainbow. Oh my god, if you're gonna show me a rainbow chart, I'll get out. Just leave. I don't ever bring that up in a conference call, a live stream. I don't give a shit. I can put that rainbow chart behind anything and it looks legit. You can put it behind Tesla, the S&P. Oh, we're overvalued, undervalued. I mean, this chart is just pure fugazi. Let's be real. But if it's right, it's the inverse Jim Cramer effect. As soon as he starts quoting Williams cycle, Nvidia is just going to go back up next week.
Klein, he needs to last till July, end of July. Now I'm in two minds about the stock. I don't want to give back any of these incredible gains you had for the chart. And by the way, it's not really a gain until you take it, right? I always say own Nvidia, don't trade it. We were able to stick with this one. And Apple.
Who the fuck honestly owned Nvidia? Who the fuck honestly said don't own it, trade it? Can we go back far enough, Mr. Cramer, when Cathie Wood sold the bottom, everything money was shorting it because nobody could predict the business model shift that every big tech company would need AI chips? Like, come on, dude, and just own it, don't trade it. Come on, dude. Just own the S&P. Then you own it and you don't have to trade it. You'd have got all that exposure and all that upside with none of the volatility and risk of not owning it. I don't know anybody in my personal investing circle that had the cojones to buy it and ride it up to where it is now. Like, come on, dude. Who the hell got that lucky? A lot of people did, but most people are not that smart.
Well, another one that we don't trade. And hey, come on, this was right. And Nvidia was up 9% this week and Apple gained 8%. This is a stellar week. But I respect Larry's work enough to show it to you. And as Investing Club members know, we actually did some trimming in some other AI names today. We know we've been feeling a little greedy, and it's quite unbecoming. When you have big gains, you need to take something off the table. I am still a true believer in NVIDIA, but I don't want to be oblivious to the scale of this massive run. See, look at it. I mean, this is just remarkable. Now, if you follow the cycle entirely, you might want to sold there, and that would have been exactly what the problem is. You wouldn't have gotten back on for that. So, I mean, maybe it goes down to here. Maybe it doesn't go all the way. It could fill in this gap to 90. Larry mentioned that to me. But look, if the stock follows Larry's predicted pattern, then I guess you could only imagine the capital destruction you could have because so much is key on this one stock. So let's not be too greedy. Remember this remarkable, albeit limited, narrow year. You don't want to spoil it by refusing to ring the register on every one of your stocks that may be AI. Pick one, pick two, please, for me.
And then Jim Cramer's getting weak-handed here. Time to take some profit, boys. It's been one hell of a run. I really want to see how the Canadian pension plan is doing, to be honest. I mean, Canadian pension plan, they bought in, I think it was 2016, 17, somewhere between. I have to double check, but they owned NVIDIA. They owned Google. The Canadian pension plan bought all the best stocks at all the best time, and I wonder if they're still holding them. I'd be blown away because they be printing this year, man. Oh, my God. The Canadian pension plan is doing the only good thing that in the government that's doing well for their citizens right now. But, yeah, I don't know. Jim Cramer, man, take some profit. I'd be saying the same shit, though. I wouldn't have the balls to hold through this. I probably would have taken most of my money out. When you get epic, just unbelievable runs like this, it's so hard to hold because – once it flips the other way, it tends to flip quick, and stop losses don't always guarantee like these trailing stop losses, because if you get those material days where the stock drops so dramatically that it just flies by your stop loss, or you get halting in stocks like the GME where people wanted stop losses, but that constant halting kind of prevents you from even, enacting it. It just opens up at a lower price than your stop was even allowed to cover at. So, I mean, you got to be a little careful with some of that stuff, right? And we're heading into one of those pivotal earnings seasons yet again, right? Like, I think this week we're actually getting the kickoff for it, but none of the fun stocks are at least till mid next month. But I mean, we are at the end of the second quarter, right? Like 6 months in, 15% gains in the S&P. Nvidia's up almost 200 damn percent, 180, whatever the hell, it's up a lot. And we're going to get some pre-earnings that no one really cares about. But, hey, we'll check it out. FedEx is going to give some insight into shipping, though I think Amazon's more intriguing than that. Nike's also kind of intriguing. I know a lot of people were asking about Nike. I don't have an opinion on it. I'm not much of a shoe guy. Don't really understand the hype behind overpriced shoes. I'm a Skechers guy, a frugal loser in that aspect of having any kind of drip. Do you have any opinion on Allied Property? Maybe I'll do a video on that next week. Shot down hard. I know. A lot of people talking about REITs. A lot of REITs have taken a downturn. I've honestly been more intrigued by Realty Income, to be honest, because it's trading more of a fair value, and it's down almost 10% this year. It gave up a lot of the gains when it popped up. A lot of REITs have taken a shot down. These ones, you just got to be hyper careful with, man, because my problem is like, I don't want you to miss out on like all these gains that everyone's having today. And I feel like, a lot of people think they're smarter than the market is. Let's just take a look at Allied Properties. And this is the US one. I hate that I can't pull up the Canadian tickers for these, but a lot of the US stocks have recovered from the real estate standpoint, like a lot of office REITs and all that, but Canada just have been having a hell of a time catching back up. And I'm not sure exactly what's causing this or what the fear is still in real estate, considering Allied has such an incredible balance sheet and is trading so well below its net asset value. Everything about it's great. The earnings have been really strong. The company's been like really doing a good job at refinancing. They sold some properties, which I think they paid out in a dividend. So I just don't know. I mean, I wouldn't make these huge positions in your portfolio. I would just be careful. I don't know. It's like I've been following MPW for the longest time, and I always kept thinking that I was going to buy back into this one, but I haven't had the guts to do it. Because I mean, man, this thing is materially back down to where it was in 2008. It's paying a huge yield that it can still currently afford. This could be one of the greatest recovery plays and one of the greatest chances to buy real estate in a lifetime. Or it's just going to be a defining factor to a very, very slow recovery. And we might not see what we saw from 2008, where, the government bailed it all out. And then before you knew it, after the bailout, everything got to recover really quick. I don't know if that's going to happen the same way. It just depends on how fast they cut interest rates, I guess. I honestly have no idea, because these stocks are materially way too cheap. And I'm not sure why the market has just turned their head away from it. Maybe the same reason as small caps. I know somebody was asking me about some small caps in here. Where was that? One of you were asking me about a few of the small caps that I have position in. Where was that? Here's some Brampton. Not trailing. Right here. Charbonne and Myriad, some of the companies that I work for, sponsored on this channel, and I do some other stuff for them too. But it's not that they're too risky. I mean, microcaps are inherently risky. Charbonne is fascinating. I mean, it just depends on what your risk tolerance is. Small caps in and of themselves are just wrecked because venture capital. It's so hard to raise money. So at least Charbonne could sell off some old assets. Myriad, they just raised a bunch of money. I think they're just finishing up financing. So they have money to get some stuff moving. It's just, like I said, you're just taking on a lot of risk with companies that are kind of pre-revenue. I mean, Myriad's a uranium play. Charbonne's a hydrogen play. At least Charbonne's got some contracts with Superior. They're going to have cash flow, and they plan to be cash flow positive within the next year by 2025. So it's up to you, man. If you like the risk and you can handle it, that's why I talk about a broad variety of stocks. I just don't like people going all in small caps. I feel like they are far too risky at this stage of the game because they can't raise capital. As somebody that works in venture capital, and I help companies raise money, even like well beyond this channel and the stuff I do on YouTube, it is one of the toughest market environments where the largest venture capital firms, they don't want you making less than $80K a month. Like, they're looking for companies with really great cash flow, SaaS operated businesses, mostly software. They've really done a 180. A lot of mining companies have been dealing with a lot of ESG compliance, regulatory crap when it comes to protecting the environment. We really need to take a step back, I think. It's like Elon Musk. I mean, I don't like quoting him all the time, but he made a good point that sometimes I think you just need to abolish a shit ton of laws and then just figure out where the fault is in it and then add new laws to fix it. Because if you're not getting rid of enough that it's causing problems, then you're probably like, I can't remember what the quote was. I just feel like there's too much law and regulation in real estate, in everything, in mining, in oil, and it's hindering the market so bad that they just really need to loosen some shit up and let the market just run. And they're just not. So you got to be careful with this stuff, man. Be careful. Like I said, if you want to own it for a recovery play and you're going to take that speculative bet on it, do it. But at the end of the day, just make sure your cost average the S&P, because right now tech is still the play and tech is going to crush it. And that kind of leads me to this conversation I want to have about Boeing. I don't know if you guys saw this, but this is probably one of the most fascinating things that we've been discussing about all week. I've been showing it with my family and my friends in our little chat groups on WhatsApp, because Boeing is one of these companies where the CEOs recently got a 40% raise. The stock has been in the toilet. Planes have been falling out of the sky. Doors have been getting ripped off. There's whistleblowers galore. And it's just, it's a shame because, like I said, it's the same conversation I had about MO and Altria Group, British American Tobacco, Altria especially. I hate that Altria can piss away $15 to $20 billion and the board of directors is all giving themselves raises against the backdrop of a business that's decaying at a double-digit pace. it really pisses me off, right? So this is one of those examples right here. And if I were a shareholder of this company, I'd have sold out. I'd have been voting, I would have been voting for lawsuits. I mean, it's just absolute bullshit. But it's fascinating nonetheless. It's a good case study.
Incidents that we haven't taken action on.
Really? Because we've had whistleblowers. You said you'd listen to whistleblower testimony. We've had multiple whistleblowers come before this committee and allege that Boeing is cutting every possible corner on quality and safety, not just in the past, but now. They've alleged that you've eliminated safety inspections, that there are fewer in quality and there are fewer inspectors doing quality inspections out there. They've alleged that when they raised quality issues and concerns, they were reassigned, they were retaliated against, they were physically threatened. That doesn't sound like attention to quality to me. And yet you're getting paid $33 million a year.
Could you imagine?
Extraordinary.
Senator, we have increased our quality inspectors significantly.
How much has your stock price increased while you've been at Boeing?
It hasn't, and I don't watch it much.
Have you done any stock buybacks while you've been at Boeing?
Not in my job, no.
How about your profits? Have your profits increased at all? While
I
you've
haven't
been?
had any profits, sir.
The worst answer.
I'm sorry?
I have not had any profits.
Yeah. You know, I think the truth is, Mr. Calhoun, you're not focused on safety. You're not focused on quality. You're not focused on transparency. All of this is in the record. But I think actually you're focused on exactly what you were hired to do, which is that you're cutting corners. You are eliminating safety procedures. You are sticking it to your employees. You are cutting back jobs because you're trying to squeeze every piece of profit you can out of this country. This company. You're strip mining it. You're strip mining Boeing. It was one of the greatest American companies ever. It has employed thousands of people in my state.
So much worse.
And you are strip mining it for profit, shareholder value, and you're being rewarded for it. You got a huge raise, a huge increase. So it's working out great for you. For the American people, they're in danger. For your workers, they're in peril. For your whistleblowers, they literally fear for their lives, but you're getting compensated like never before. Don't you think maybe your priorities are misplaced here? I mean, don't you think maybe it's time to get back to focusing on making quality planes and paying your workers well and taking care of the little guys who got you to where you are? That's not a rhetorical question.
Senator, I don't recognize any of the Boeing you described.
Really?
And I want to assure.
You don't recognize the Boeing that has airplanes falling out of the sky, that has had 2 Maxes crash, that has had pieces of doors fall out of the sky, that have had whistleblowers come before they've sat right where you have sat and told us, these are your employees who have told us that when these are the engineers, by the way. Are you an engineer?
I'm not. Sir.
Yeah, they are.
Yeah.
And they have said that they're not listened to, that they're retaliated against, that they're threatened. That's the reality of Boeing today. That's your company that you have created. Now, I don't recognize it either from the company it used to be decades ago, but under your leadership, that's what Boeing is, and you're being rewarded for it handsomely, handsomely. Don't you think there's something wrong with that?
A little bit.
Why haven't you resigned?
Senator, I stand by what I said, and I want to assure the great employees in your state that that is not the way we operate the company, and it never will be. And if you would like my chief engineer to talk about what he sees.
No, I want to hear from you, because what I hear from you is a lot of this team does that and that team does that. And I listen to the whistleblowers, but I don't meet with them. And I've heard about all this stuff that you Congress have meddlesomely asked for because the public wants to see it. Gosh darn them, but you actually haven't supervised any of it. I've heard that. It's a lot of it's this, it's that, it's this, it's that. But meanwhile, you're getting paid a heck of a lot of money. It's unbelievable. If anybody's coming out of this deal good, it's you. Why haven't you resigned?
Senator, I'm sticking this through. I'm proud of having taken the job. I'm proud of our
this
safety record, and I am
You're proud of
very
this safety
proud
record.
of our Boeing people.
You're proud of this safety record.
I am proud of every action we have taken.
Every action you've taken.
Yes, sir.
Watch this. This is the best part right here.
Wow.
I fucking love it.
There's some news for you. Well, behind you, you can't see it. Behind you, the folks are showing pictures of the people who are the victims of your safety record. I think we can all see them.
Could you fucking
And I think the American public, when they fear to get on their airplanes, they understand your safety record. And frankly, sir, I think it's a travesty that you're still in your job.
I honestly agree. I think it's great. Like again, kind of always going back to Elon Musk here, but he didn't really get paid much until the stock went up. And I really feel as though most CEOs should not be getting compensated unless shareholders make a return. I mean, at the end of the day, the shareholders are the boss. And I don't understand like that we're not voting on, like, I guess the board of directors just gets to vote on how much the CEO gets paid. I mean, at least in Elon's case, we had to approve that after the court kind of barred it. But at the end of the day, like, how the fuck are these guys making so much damn money against the backdrop of one of the worst performances in a decade in these massive conglomerated companies when literal max planes from 2018 to 19 or 2019, 2020, is that when the Boeing, because the new engines they propped on caused the mess up with the autopilot. I mean, 2 of those planes crashed, and then you got the doors flying off and all this weird whistleblower shit. It's just fucking, it's ridiculous, man. Gotta love the markets though, eh? But we'll do a quick Q&A here because you guys are too funny sometimes, man. But I just love watching that dude get eviscerated. I think he's been one of the worst CEOs in Boeing's history for sure. What would you do with 10K USD right now? I'd probably load the boat on Tesla and then probably keep some cash because I would hope the markets dip here sooner or later. I'm kind of getting back. I'm always buying, but like I told you guys, when the markets just start flying like this, sometimes it feels good to just keep putting a little bit of cash away. So when the market does dip, that's when you can double up your investments. But I've been going pretty hard, man. Bought a lot of stocks. I mean, I put 11K in my TFSA like last week. I pulled that out of my corporation because I could avoid paying tax on it. And we bought SCHD and Tesla. I want to keep buying VDY as well a little bit, just in case we do get a recovery out of the interest rate cut cycle. But at the end of the day, the S&P or the Qs, I haven't really bought the Qs because the wife has too many tech companies, but I would really like to just be buying the Qs and the S&P mostly. Because again, I'm still a long-term believer in the technological jump that we're going through here. Are you talking about buying Allied here? Just come on and do it. Get some good Allied property or REITs. Maybe. I don't know. I still haven't had the balls for it, and I'll probably regret it sometime down the road. Overregulated for sure. Pre-existing companies have huge moats because of it. Yes, ironic a politician is saying that, except expected dip on VFV in the next month. I don't know. I don't play that game. Like I said, the best strategy that I've ever learned from a really old Canadian investor, a guy that I've only ever heard one dude ever say this, which blows my mind because it's probably the best strategy, is you basically have an emergency fund and then you have a stock market emergency fund, which just basically means that the stock market dips by 10%. You double up your monthly contributions utilizing that emergency fund. And you just, for as long as it's down below that 10% mark, you just keep doubling up the contribution every month. You just keep, putting double in. And then once it starts to rally back again, you just go back to making your regular contributions and then maybe just start putting a little bit more back into that cash emergency fund for when the market dips. It honestly, I've seen it work, like, again, in the last 2 years, just because of how bad that October dip was, the last dip we had there before coming into this year, it worked quite favorably if you're able to catch some of those double-digit dips, because they're rare, right? So you kind of got to take advantage when you can. And a lot of people were too busy buying the tops, which we're all victim to. I mean, you have to buy the top because sometimes there should be an opposite meme for when the dip keeps dipping. It's like when the rally keeps rallying. And you just don't know what to do anymore. Oh, God, the CEO looks like someone Boeing recruited from the mafia. Honestly, he seems like a nice guy. And honestly, the safety record of Boeing is pretty high. I mean, when you talk about planes crashing, it becomes a worldwide marvel because of how far and few between it does happen. I mean, it is a little over-exaggerated saying this is like some major thing that's occurring. It's really not. It's just a shame when it happens, and it shouldn't happen at all. But opinion on TD right now, TD's fun, man. Like I said, I get my exposure to TD through VDY because it's like 10% of the position. So every like 10,000 I put in VDY, at least I know a good chunk of it's going to TD. My fiance owns individual position. We do have good exposure to it. So I'm not really buying a hefty amount more of this because, again, like, it's just been caught in the weeds. But I think it's going to have the same kind of recovery that we saw with Wells Fargo. Again, presuming that real estate doesn't I mean, there's still risk with banks because I think, what is it, like 3/4 of all or 2/3 of all mortgages are coming due between 2024 and 2026. I think the Canadian economy will withstand it no problem. I think, real estate's still holding up. I don't think loans can get that dodgy considering the asset values aren't really decreasing. The only time you got to worry about bank defaults is if real estate corrects. Because if you have loans that are defaulting on renewal and the real estate that's backing those have severely collapsed, which again, in luxury real estate, it has. But I don't know. I still think Canada's pretty strong, man. I still think, the end consumer here is pretty rich in Canada. Canada's becoming like Morocco or whatever. It's a super rich nation. when we went on vacation and just traveling in all these countries, like, and I keep hearing how expensive Italy is and expensive like all these places are. And when I get there, I'm like, yeah, the euro on the conversion sucks, but real estate still costs half as much as it does in Toronto. I mean, if you can make it in Toronto, Vancouver, New York, I mean, it's just crazy how cheap the rest of the world looks to live in, so it's like that for a reason though. So I mean, it's still about $10 off the offer price. Are you going to make a play on the National Bank potential acquisition of CWB? Now again, I wish National Bank was a bigger position in VDY. I think it'll lead to some better performance. National Bank has been a truck that keeps on truck. How is H Bank actually performing this year? I mean, this thing's kind of given up some of the gains. That's nice to see. Down 10%. I didn't even notice that. But what has H Bank been doing? Just the broader, ETFs. Kind of curious how they've been doing this year. Yeah, I mean, they've been lackluster because TD has been stealing a lot of the thunder from these equal weight bank ETFs. It's no good. I'll have to take a look at what you're talking about here because I have not heard of this potential acquisition. But honestly, the acquisitions are the best. I love hearing these because if you want to know, we were talking about Royal Bank earnings. The only reason Royal Bank did so well was because, they're starting to capitalize on the HB. Still thinking about that equal weight bank ETF, but they're capitalizing on HSBC because, anytime they do these big acquisitions, you never hear about it because they never they'll never break it apart in their earnings. And they're like, oh, this is the added revenue that we got from HSBC. No, it just starts to add. As soon as the acquisition goes through and a quarter goes by, all of a sudden their earnings just jump up. And that's what's driving this growth that's keeping Royal Bank alive. But, it's always fun. We'll be a little while out before our next bank earnings. But honestly, I think the next big catalyst let's see how the TSX has been doing here, TXS heat map. Honestly, for the Canadian markets, the only next big catalyst is seeing continued interest rate cuts. If we can keep getting that, I think the economy, we'll start to see more of a recovery in stocks. I think if we can get more hope that's the case, it'll alleviate a lot of the stress in the markets because the last 30 days just looks like garbage. The last 180 days, there's literally one stock in almost every sector that's been keeping the market alive. C&Q, how is C&Q down 45%? That's not accurate. What the fuck is that talking about here, C&Q? Did I miss something here? Canadian Natural Resources? No, why is it saying it's down 45%? What's wrong with you? What is wrong with you, Market Beat? Look at that. Look at that. What the fuck? C&Q's down 45%. Psh, psh, like the biggest powerhouse fucking energy stock we have right now. Yeah, right. I don't trust any of these now. I don't even want to look at a 1 year. I don't trust any of it. 1 year, it's down 32%. Psh. Manulife is the stock you wanted to buy, man. These insurance players, man, they've really capitalized on higher interest rates, haven't they? Stock split, yeah, that's probably what's causing it, is the stock split. Let's be real. They haven't been able to update their stupid formulas on their spreadsheets. Opinion on Magna. Magna is, what I would consider a better Magna play, because Magna is a big part manufacturer, and I honestly don't know their business well enough to know what the biggest driver of their parts are, because the stock is down quite a substantial amount. And it's got a great yield. The PE is pretty good. Their net income looks like it's getting devastated. Magna, because it feeds so many of the auto companies, I'd be really concerned. And considering the revenue is actually growing quite nicely here, gross profit. Yeah, what's going on? Why is Magna down so much? What's their balance sheet look like? Are they got a lot of debt here? Total assets? No, I mean, even their liabilities are a little higher than I'd like to see them, but still, it's a manufacturing company. Like I was saying, one of my favorite plays, if you like Magna, is Granite REIT. I would look at this one. Granite Real Estate Investment Trust, I think about 30 or 40% of their entire assets are leveraged on Magna for industrial real estate. And this one's trading down quite a bit. It has a beautiful yield. I'd be looking at this if I was into real estate looking for recovery play, because these companies have still done exceptionally well. I mean, the revenues are still growing in this backdrop of a higher interest rate. I mean, look at this chart here, right? It's a really good exemplifier. But look at the quarterly. I mean, they've still been growing. Even in Q1, their revenues and earnings jumped up pretty dramatically. My two favorite REITs right now have probably, the industrial sector still with Granite and Stag. Stag is actually, I'm surprised Stag has dropped off that much this year already. But these two REITs, they don't look like they've done a whole lot, but they have a lot of growth coming underneath them. And then you also have, storage units. I really like PCA, or not this one. What's it called? Public Storage REIT. These are my two favorite REITs. I think if I were going to buy some, I really like these ones a lot. Public Storage has done a really good job. just growing the company and scaling in a very particular. I feel like with real estate, you want to be hyper particular on what you're buying. I mean, Realty is nice for diversity, but you're just not getting the same growth that you've been getting out of some of these over the last 5 or 10 years, which is kind of interesting. What else is going on? Crazy great yield on some of these REITs. Yeah, I mean, RioCan's getting back down to its lows during the pandemic. Smart Centers, CPG.to. Yeah, I haven't looked at that one in a while. CPG.to. Let's take a look, and then I'm going to get out of your hair here. Crescent Point. I mean, are you really looking at Crescent Point? Is that CPG these days? Crescent Point Energy? Because that was I haven't heard that name come up in a while. Why can't I find it? Crescent Point. That's not Varen Inc. There's no way that's right. I'll have to look it up. CPG.to, right? You know, there's so many of these old stocks I haven't heard about in so long. I hate Google. Google got rid of like all these Canadian companies, and I actually have to go like look them up on friggin' Yahoo or whatever. What has gone on with this Crescent Point? It looks like it's been recovering from the wicked crash that I had. I don't know. Something I'll have to dig into. It's more of an energy play, isn't it? You know more than I do about that one, probably. I won't give you some bullshit answer. But yeah, other than that, folks, like I said, it's going to be a pretty fun couple weeks, I think. There never seems to be a dull moment, whether it's NVIDIA or whatever the hell's going on with this AI stuff. That never ceases to amaze me. But we'll see when it starts working its way more into the market. And I'm still just analyzing self-driving videos like there's no tomorrow, because I think that's going to be the next pivotal play. And I think I'm really looking forward to seeing, when they. I feel like we're just on the cusp of something incredible happening in autos, and we're not there with tech yet. I think we're still waiting for the next big AI push, which is going to be robotics. I honestly think people keep thinking software is going to be this next big play, but I think that's going to be like crypto, where it has all this. It has all these features of like, oh, it's going to be so big in the future, but it's going to take like another decade for it to really catch up. I mean, you're not really going to be fully editing. Look at editing software, right? I think if you can get Unreal Engine to start really crapping out some crazy quality like video content where it's all AI driven, might be a cool like integration, because Unreal Engine has really done some big updates with their software. It's just I haven't seen any major AI push outside of stuff. Maybe we do at work with some editing software, just mild things with Photoshop. I mean, nothing that's materially impacting that's going to like disrupt an entire. I think, like I said, the thing that I'm looking most for is like, I think robotics is going to be a huge jump in AI, self-driving, and I really am at some point expecting, and I don't know how long it's going to take, because like I said, this is the speculation on how real AI is, but I think when you start seeing porn and some of these high like valued media industries start being like fully generative, because they're very easy things to generate. They're not like full storyline Disney movies, right? Like they're like $1 trillion. I mean, how big is the porn industry? That's why I always keep abbreviating to that. And I think it bothers some people when I bring it up. They're like, why are we so focused on porn? And I'm like, because it is a huge industry. It makes an ungodly amount of money. And there's no real story to it. I don't have to generate an hour and a half, 2 hour length film with all these celebrities. It's like people are just cranking it out on OnlyFans, and it's going to be the easiest to replicate, right? And I think that'll be when the government steps in. I honestly think that it'll be what's the TAM of the porn industry? I'm just curious here, because I really think that's what's going to happen. I think you're going to see huge disruption, and it's going to destroy OnlyFans. It's going to destroy all the major industries. Oh, is it that big, man? Holy shit. Yeah, I think it's one. Is that right? No, it can't be right. I'm not looking at the right numbers here. Market size. It's saying that's got to be 1.1 trillion. There's no way that's right. In the millions, billions, 1.1 billion. There's no way. It's got to be bigger than that. Come on. How much does the porn industry generate dollars annually? Just curious here, because I feel like it's going to be the easiest thing out. Okay, so between you're getting up to 15 to 97 billion. Or wait, what the heck? The porn industry generates more income than the combined revenues of ABC, NBC, and CBC, and more than the combined revenues of the NFL, NBA, MLB in the U.S. The porn industry generates 15 billion to 97 billion a year. Yeah, okay. So, I mean, yeah, that's why I'm saying, like, you disrupt this industry and the government's going to wake up real quick when everyone's freaking out that they can't collect their porn checks on OnlyFans. I'm with you, Kyle, on Tesla. Yeah, Tesla fan. I feel like I've accumulated a few Tesla followers in here now that I can talk about it openly and candidly without getting ripped apart. because I feel like every time I bring it up, there's so much heat around Elon and all this stuff, but I feel like people are finally starting to miss the big picture of Tesla. And I've seen people come around. All the Tesla bears that used to just rip on them are starting to come around. Everything, money's coming around. You know, I watch a lot of people that just rip on all these tech companies, and they're saying like, hey, Tesla's still expensive, but you got to imagine that self-driving and this shit's starting to become a reality, baby. But I'm going to leave it at that. I'll ramble about it another day, but I do appreciate we got some fans in there with me. Stay cool, stay awesome, folks. Enjoy the rest of your weekend. Peace.